Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Saturday to you. Hope you're having a fantastic weekend and or day with you and your family. We're going to take a look here, of course, at Bitcoin, standard stuff, kind of just help understand best practice, big pictures, kind of look at obviously, everything that's going on right now, and kind of just see if this continuation to the upside will continue, and hopefully understand, what's going to happen if it doesn't, right? So a handful of little stuff there it's important to recognize. But we're going to take a look at that and much more. If you're new to the channel, not a financial advisor. I love teaching people to trade, though. And I can tell you I've been doing this for a very long time. It's a very awesome passion of mine, and I hope that you can learn something here today. If you do want to become a better trader and learn something more, CryptoCache.tech is a website, link in the description below. Go ahead and check that out in your own time. And feel free to become part of my community, as well as a trading academy that I teach you how to trade, and obviously my trading signal group as well. So taking a look here at Bitcoin, what we want to look at first, and why don't we just go ahead and start with the big picture and work our way down. Okay, so let's go ahead and start with the monthly and just kind of acknowledge the fact that we are above the 50-day simple moving average, right? That's trending right around 22,000. So hypothetically, that'd be our bottom for the month, right? Now, Bitcoin has historically had 3 red months followed by 2 green months, okay? So it's a very, very common characteristic for this to happen. So these 2 months are expected based on just the natural progression. So how much higher will it go? Well, I mean, 28,000 could possibly be a higher point. We could definitely see that, but we could also see much lower too, and that might come next month. So just be prepared for that. We do have kind of somewhat of a bearish flag pattern forming on the daily, and it's just important to kind of keep that in the forefront of your mind, not to go too crazy with a lot of long positions. Not saying you need to short, but generally speaking, that's essentially where we're at. Okay, so monthly is looking pretty decent. We're not back up over 50 on the RSI. I think that would be a good tipping point for us. If we get up over 50, we can have a leg to stand on and effectively consider that to be a support level, and then we can consider more bullish tendencies. Looking at the weekly, though, if we take a look here, of course, we can kind of see what's going on with the weekly. We got the moving average here at about 23,000 for the 200-day simple moving average. So that is a good sign, kind of giving us that reiteration that 23 and 22,000 are the essential lowest points in which we should expect the price to go based on those moving averages. Being back up over the 200 is extremely important. So again, this weekly candlestick hasn't closed yet, but we're getting close. All right, so definitely looking good there. And we could see the same thing here as well, where the price action came well below 30, and now it's starting to creep back up towards 50. So everything seems to be in pretty good shape there. On the daily here is kind of where things get, I guess you could say, interesting, but also fairly normal in the sense where we are essentially ascending still in this trend, right? We've retested it roughly 3 times, and we're looking pretty good there. So again, a break below that would have been disadvantageous, but since we're still above and we're maintaining over 24,000, we're looking to be in good shape. Now, I was talking yesterday about this ominous candle here, this gravestone doji. Really didn't matter much at all. Doesn't mean it's not going to matter in the big picture, though, because, of course, we do have this bearish divergence here, of course, this bearish flagged pattern, so to speak, that keeps getting retested and rejected. Okay. So the price is having trouble or difficulty breaking that $25,000 plane. So again, this is just something to acknowledge because it's not guarantees, but the likelihood of the price coming down from here is quite high based on previous patterns and just the ways in which bearish flag patterns do occur. Again, the probability, yes. Likelihood, maybe not, because we do have a lot of volume support in this specific range here, right? So if we take a look at the volume support, tremendous amount of volume right around 23,000. And I think that's very important. That speaks loud, kind of giving us that foundation of volume, whereas the price action, I mean, I think the likelihood of the price coming down to that 14,000 range is a lot lower than it is the price action to come up to 28,000. So again, just something to think about. These are the things you want to kind of add to your, I don't know, your portfolio of knowledge and try to make sure you just look at everything, right? So that being said, when we looked at the moving averages, they're essentially below the price action too. The 200, correction, the 50 and the 20-day set moving average are working as support levels. Again, the 50 commonly works as an ascending type of pattern, and we are in an ascending type of pattern right now. So even if the price action goes sideways, we should likely see the 50 work as a support. It's notoriously been a very good support level in the past, now that we've effectively broken that. So I like to see that, and that looks very good. We also can see that the RSI is trending closer to 70, but not even close in that sense. In other words, it does have more room to grow. In other words, we could very well see a break above 25,000. If we do, there's a great chance we'll see a continuation higher because there's a significant gap of of no price action in that range, right? So it's building that volume profile at a lower price point, right around the 23,000 mark, and we're looking pretty good. So I would say if you're going to do a long position, make sure your stop loss is just under 23,000. Something along those lines will be appropriate. Because again, if we lose 23,000, then we've lost the ascending trend as well, and that's something to just again be mindful of. So until this trend breaks, we need to assume it's going to continue. Moving on to the 4-hour though, if we take a look at this guy here, we can see we're above all moving averages, which is important. The 200-day SIP moving average is working its way up as a support level, which is very standard. It works concurrent in most cases with ascending trends. So we're still looking great there. We also want to look at the RSI. And I think I saw in the community chat this morning, they were talking about, bearish divergences. So you can see, somewhat of a bearish divergence here, whereas, the price action's going higher essentially, and the RSI is essentially printing lower highs. This isn't significant. These are very subtle lower highs, so I'm not super concerned with it, but it does reiterate the fact that we're losing momentum on the 4-hour, which does translate into the daily, okay? So again, a 4-hour RSI bearish divergence, if you will, does count for something. It does reiterate the fact that 25,000 is a strong resistance, but it also gives us just, I wouldn't say a false positive, but I don't think that's something to bank on. So again, just something to think about there. It does kind of factor in. So in the overall sense of the word here, the 4-hour time frame looks slightly more bearish than the other time frames so far. Again, that could just imply that the price action might correct itself back down to 24,000 and or even 23, and that'd be perfectly fine if it does. I'd prefer to see the price action stay above 23,500 though. Looking at the hourly, if we take a look at the Ichimoku cloud, we can kind of see that there is a significant benefit / potential for reversal here. Let me explain that. First of all, the lagging span is intersecting with the price action likely within the next 6 hours. So unless the price action continues to go up higher for right now, the lagging span will give us that indication that it wants to intersect. And in that case, that's usually a very conservative sign to close your long position if you have one. Okay. So again, it basically just means we're kind of losing that, we haven't been able to sustain a continuation higher, and in turn, you might want to close your position. It's kind of just a cautionary tale there. When we see the conversion line on the baseline here, conversion line is still above the baseline, that's positive, but it is losing momentum. You can see it coming down. All right, again, that's some type of moving average there. Furthermore, we also have the lead upper and the lower lead essentially here, and the price action is above that. This is the most important thing to me. So as long as we can maintain this, again, a price point over just say 24,300, we should be in good shape to see the price action continue. Just keep in mind, this is a weekend. Typically, we're seeing a lot less volume on the weekends, and in general, we could very well see a shift in momentum tomorrow, a definitive direction tomorrow evening when the Eastern market opens. So again, just something to kind of think about. The thing to really also recognize too is that we were overextended on the hourly when it comes to TD sequential. In other words, we hit a 9, almost got a reset, and it continued up higher. So I'm not surprised by the pullback. It makes perfect sense. So just note that this is still higher lows. We're still maintaining an ascending trend, and until that breaks, we need to assume it's going to continue. Right, but we also definitely need to be aware of the fact that we do have a bearish flag pattern printing so far on the daily, and until we can break above that soundly, this upper lead, essentially this upper trend line right around 25,000, we may want to assume the price action might correct itself down. So what does that mean for us right now? Well, it doesn't mean that the sky is falling. It's actually very standard. This is kind of, in my opinion, just very normal Bitcoin behavior, and I don't see it being super concerning. Ascending trends, I feel, are much more, I wouldn't say concrete, but the likelihood of it continuing higher seems higher to me based on everything we've seen so far versus a reversal to the downside. But just be mindful of the fact that if it does come back down, it's absolutely something that could happen, right? It's just totally a thing. So again, until we lose these support levels, I think 24,000, 23,500, maybe even 23,000 is a rough estimate, right where we have that volume support. If we lose that, then we should start having a different conversation. Until then, it would make sense for it to correct itself and, of course, bounce off of some of those key level supports. And it's very standard, again, for the price action to come back down and retest that level as a support, which it did already. Okay, so again, we see this 24,000 level tested, bounced off, the key level Fibonacci retracement 23.7, and it continued higher. It could very well come back down to 24,000 again and then break. Okay, because again, the more likely you retest something, the more likely it is to break. We've seen 2 tests of 25,000 so far. That's a positive sign, but that could very well, signal a potential reversal based on that rejection. So I'm interested to see what happens in the next 24 hours, but I'm not super concerned with the weekend price action because typically weekends are, well, I would say they're lower volume, but they can be more volatile because the volume is spread out in different ways. We're seeing some altcoins taking off. In fact, I'll probably cover those here next. Solana and Matic, those are both looking very strong right now, and I think that there's definitely some potential in other areas outside of Bitcoin. But I would exercise caution if you're going to be trading altcoins right now because they are very tricky to trade based on their connection to Bitcoin. Right? We always try to identify if they are moving independent or concurrent. And at this point, coins that are moving concurrent with Bitcoin, I would just recommend maybe taking a sideline here, and of course, being that patient type of trader, right? Again, not a lot of folks agree with that. That's perfectly fine. If you want to get wrecked, that's okay. You got to take some risks in trading. There's no doubt, but overall, you can survive any type of market if you are smart and careful and calculated about your entry points and obviously how to set up your trades. And those are things that I provide in my trading academy as well. More importantly, my signal group. In fact, recently we took a trade for Solana, almost at our first target. But the main reason why I like that trade is just because it's more designed for long term. It's a cross leverage with low leverage and low position sizing. Right? So there's different things that you want to try to focus on and pay attention to. And I think that it's important to be dynamic in your trading. You can't stick to the same thing all the time. Either way, conversation for another day. I hope you learned something here today, of course. If you did, comment below, all that good stuff. Feel free to join if you'd like to become a community member. CryptoCache.tech is the site. Link in the description below. I do look forward to working with you. Have a great rest of your day. Thank you.